Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Beijing North Star Company Limited annual report. Beijing North Star Company Limited offers a diverse range of businesses and services. At its core, the company is involved in real estate development, encompassing the sale of residential properties and trading activities. In addition to this, it operates rental apartments, office buildings, conference centers, and hotels. The company also provides various services including convention and exhibition services, hotel services, commercial property management, and hotel and restaurant management consulting. Furthermore, Beijing North Star Company Limited is involved in multimedia information network development, system integration, and software development. This comprehensive range of businesses and services positions the company as a multifaceted player in the Chinese market. Beijing North Star Company Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Beijing North Star Company Limited trades at a lower price-to-book ratio of 0.3 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 76% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. Convention and exhibition services have been a significant contributor to revenue growth, with a 6.9% year-on-year increase in the number of events held, accompanied by an expansion of venue and hotel operations. The real estate development segment has also seen growth, thanks to precision marketing efforts, strong sales performance during peak periods, and successful project deliveries. In addition, the company's integrated real estate development and operational capabilities have enabled it to capitalize on opportunities and drive revenue growth. On the other hand, the primary drivers of revenue decline are largely attributed to the real estate development segment, which saw a 15.27% year-on-year decrease due to a decrease in completed area. The mixed results across different segments highlight the complexity of the company's business operations. While some areas such as Langfeng North Star residence and commercial projects have seen significant revenue growth, others like Chengdu North Star residence and commercial projects have experienced mixed results. Overall, the company's revenue performance is influenced by a combination of factors, including market conditions, operational efficiency, and strategic decisions. The net income of the company has seen a significant increase due to new leases. Specifically, it rose by RMB 11,530 and RMB 25,012 in different periods. This upward trend is attributed to the addition of new leases, which have contributed positively to the company's revenue. However, the profit margins have not followed the same pattern as the net income. For existing leases, such as Huibin Plaza and Huizin Plaza, the profit margins have actually decreased. On the other hand, new leases like North Star Times Tower and Changsha North Star Plaza have led to an increase in profit margins. This disparity suggests that the company's profitability is being affected by the mix of old and new leases, with the latter contributing more significantly to its bottom line. The company's debt level has undergone significant changes in the recent period. While long-term borrowings have decreased by RMB 8833, loans from other parties have increased substantially by RMB 4,728,011. This increase in loans from other parties is a notable change that suggests the company may be relying more heavily on external financing sources. In addition to these changes, short-term borrowings has emerged as a new line item, with a value of RMB 253. Furthermore, total segment liabilities have decreased by RMB 344,206, and corporate borrowings have also decreased by RMB 1,848,697. Other corporate liabilities have decreased by RMB 1,772,533. The company's interest expenses have also seen a decrease, with a reduction of RMB 99,571. This decline in interest expenses suggests that the company may be benefiting from lower borrowing costs or more efficient debt management practices. Overall, these changes indicate that the company is actively managing its debt levels and seeking to optimize its financial position. The company's performance can be summarized into two distinct categories: well-performed and poorly performed regions or segments. On the positive side, convention and exhibition services generated a significant profit of $348,561, while convention and exhibition facilities reported an adjusted profit before income tax of RMB 492,087. Additionally, Beijing's four centers functions, strategic emerging industries, and advantageous industrial sectors all performed well. On the other hand, real estate development was a major area of concern, with both pages 10 and 11 showing significant losses of $2,953,043 and RMB 3,420,167 respectively. Other business segments also reported an adjusted loss before income tax of RMB 2,980,864. These poorly performed regions highlight areas that require improvement and attention from the company's management team. Concerns have been raised regarding inventory buildup in various parts of the supply chain. Specifically, issues have been noted in third and fourth-tier cities, where excess stockpiles may be accumulating. This problem has also been mentioned elsewhere in the report, further emphasizing its significance. That concludes the financial summary for Beijing North Star Company Limited. Feel free to comment below, and I will be happy to answer them when possible.